Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets might witness some amount of recovery after witnessing massive sell-off in the previous session of trade. Remains to be seen how the new month FNO series will shape up. RIL earnings will be in focus, so do keep an eye out on that one. A bit of interesting update there. JP Morgan has upgraded in India to overweight, included 3 stocks in the emerging market portfolio. But at this point of time, talk about the global setup. GIFT Nifty indicates a flat start coming in for the Wall Street. Overnight, US stocks dropped as investors weighed in disappointing tech earnings against hot GDP report, and Asian shares through tracking US futures higher and bonds essentially hold gains at this point of time. FII Data, well, no surprise for getting there, for guessing that. It's a big number that we're looking at. 7,702 odd crore of sell-off was witnessed by FIIs in equity markets put together. And DIIs, on the other hand, that's the number that you really need to read into. 6,555. That's the number that you need to work with. So there is a structural amount of support which is coming through the DIIs. Well, JP Morgan has joined in other prominent global brokerages such as Morgan Stanley, CLSA and Nomura by upgrading in India to an overweight rating. It includes several factors which has led to this: elections and the growth in emerging markets, nominal GDP and all of that put together. But overall, what we have in terms of FII trend in the FNOQs, well, they have been sellers across the board. Talk about index options, talk about stock options, talk about bank Nifty, stock futures, sell off everywhere. You see the number also in equity markets for the cash segment. They were to an extent of sellers, to an extent of 7,700 odd crore. But massive selling has been witnessed overall across the board. Overall, for the November series, Nifty has fell as much as 666 points. Heavy short rollover by FIIs after a fall. In fact, FII longs are just now at 11%. You might read it a little differently, but usually FII short exposure works well in the favor of the markets and has led to an uptick in the month of March, June and September when the numbers come in low. Talk about FNO ban. Well, what is new in ban? There are no new entry there, but what comes out of the ban is Delta Corp. In terms of option queues, well, Nifty PCR, it's at 0.82 versus 0.67. So that's the centimeter check that we have, 0.82 versus 0.67. Earnings that need to be watched out for. Essentially, RIL will be in focus. Maruti Suzuki, SBI Life Insurance Company too will be coming up with the numbers today. We also have a bunch of earnings that we need to put together just to see how is the trend stacking up overall. Dr. Reddy's, Bank of India, these are some of the other names that we have in the list for now. Overall, we've seen some amount of somber sentiment. The markets have fallen to that 4-month low level that we've seen. 7 consecutive sessions of sell-off that has been witnessed for the equity market. The cuts are also deeper for the broader indices, which otherwise seem to be outperforming the markets. But how will the real question that one needs to ask is, what next from here? Is it a strategy where we say buy on dips, or is it a strategy which still remains sell on rise? To know that and more, we've been joined by Gaurav Bissa, the VP-Incred Equities. Morning there.
Good morning.
Gaurav, what do you make out of the intense sell-off which has come through the markets in the last 7 trading session? Serious market market capitalization erosion which has happened per se for larger counterparts as well as mid-cap. What's the strategy here on? How are you viewing the markets?
We have been bearish on the markets and we have been advising our clients and we have been trimming our positions in both indices as well as index related stocks. Also, we came out with a report on mid-cap 100 index where we are expecting a 10 to 20% correction happening. It has moved down by 10% almost. And we have reduced our exposure in mid-caps also. So I'm not saying that one should be exiting, or we are not advising our clients to exit the entire portfolio, but probably switching to companies which have very strong and sound fundamentals and the trend remains positive. We are advising to switch to those companies. We are buying companies as such, but we are not very aggressive. So multiple breakdowns have been seen in Nifty. There was a good breakdown below 19,000 to 5,300. If you see on daily charts, okay types of head and shoulder pattern breakdown has been seen, and the targets can be around 18,400, 500. So any rise, like you spoke about in the beginning of the show, that they're highly oversold for 7 days. We have been selling. So there can be technical bounce back of say 200, 250 points. But overall, till the time Nifty is not sustaining and closing above 19,300, it will be a sell on rise market for time being. There can be a bounce back. The momentum indicators are in extreme oversold zones. Some amount of technical bounce back cannot be ruled out, but one should not read too much into that till the time we don't see a confirmation sort of happening that the bottom has been made. One should not be preempting a bottom.
Okay, so what are the levels technically one can now look at from here on, given that we are sitting substantially below that 19,000 mark? You think we can scale it back anytime soon? Perhaps we'll see some amount of consolidation which will take place before the rebound could take place. What's your strategy out there?
So what we advised was somebody who can take risk. We advised buying futures for Nifty. If you look at Nifty's daily chart, it has halted its fall near its 200 exponential moving average on daily charts. So there when the RS was trading around 25, 26. So and this is the second lowest in last 3 years. So there was an expectation that we may see a bounce back in RSI can again go back towards 35, 40, and which can push it towards level of 19,100, 150. So as I said, we are playing only for a bounce back, and it may retest the breakdown area of 19,250, and then again resume the downtrend that can be seen towards 18,500, 600.
All right, we're also going to be chatting about your bank Nifty strategy in just a bit. Let's address the market open there for you. Well, finally, some recovery has been seen in early deals. We are looking at gains to an extent of 0.5% out there. 19,000 mark still remains far off, but we slowly, at least on the face of it, looks like we could conquer that level anytime soon if this trend was to continue. Well, the new month FNO series at least has started on a positive note. A bit of solace coming in on that one. Bank Nifty, let's pull that up for you just to see if you're seeing some amount of strength building up for Bank Nifty index overall. Well, the trend remains pretty intact there to some amount of recovery. It has come through even for Bank Nifty. You know, the indices also recovered in the second half of the session after the sell-off that came in today, and the momentum, let's just say, has continued in today's session. There is a recovery which has been witnessed, and we are looking at gains to an extent of 0.75% coming in for Bank Nifty overall. Mid-cap index, finally some amount of outperformance there too after massive sell-off that we've seen in the previous session of trade. The sentiment seems to be a little bit positive at this point of time, but remains to be seen how does the day shape up. Do also bear in mind that JP Morgan has upgraded India to overweight rating. It's joined in the other brokerages house for the upbeat ratings such as Morgan Stanley, CLSA and Nomura. Some amount of sentiment upbeat, perhaps check there also. Nifty IT right now. Let's pull up RIL before we can move on to the other sectoral indices just to see how is the trend shaping up. RIL will be reporting in the numbers after market hours. So essentially that is where we're also lending. Some amount of support has been lent in by RIL. Let's look at PSU banks before we go on to IT, because that also is a counter or a pocket which has been doing well thus far. So a bit of outperformance coming in for the PSU banks. Along with that, let's also look at now IT, metal and the other sectoral indices that seem to be doing well in deals today. Overall, that remains to be seen. Well, the sentiment, underlying sentiment still, October advanced decline ratio has hit in a 7-month low. So the mood, underlying mood still remains a little bit cautious, a bit of recovery at 4 for you. But overall, if you look at the performance which has come through, it is a session where we're witnessing some amount of recovery after 7 consecutive sessions of sell-off that we've witnessed for the markets. Well, metal is doing well, auto seems to be doing well and is in fine fettle. In top gear, let's also look at what we have in terms of top gainers and the top losers, just to see how is the trend stacking up. Clearly, we are essentially looking at something like a Hindalco and Tata Steel. We just have market breadth right now. Look at that, advances just 43, declines 7. So clearly we are looking at a market breadth which is in the favor of advances. For now, we have Hindalco and Tata Steel right there up for you as the top gainers. No surprise for guessing there. Metal has been an outperformer of sorts. Apart from that, we have Adani Enterprises, Bajaj Auto and Infosys as the other top gainers in the list. Apart from that, Coal India also is doing well. Let's also pull up top losers that we have. just to see where the market breadth essentially is in the favor of advances. But there have been stocks essentially which have not seen some amount of recovery in today's session too. Dr. Reddy, HUL, Titan, Britannia, Asian Paints, Tata Consumer Products. These are some of the top losers that we have. But we're going to go back to Gaurav and check with him what does he make out of the current open. Was he anticipating a positive start? And if yes, what's the trade that he would suggest right now? What's the recommendation from here on?
See, as far as the opening is concerned, it is in line with expectation. As I said, we were looking for a bounce back. And if Nifty future sustains above 19,000, 19,030 rather, then we can see some more short covering because as you said, FIs also are net short and this can take it towards 19,100 today itself. So in my opinion, there can be a further upside, but one needs to have an hourly close about 19,030 on the future side. Then we can see some more upside. We are still carrying the position that we created yesterday. There's no change in there. But for fresh, if somebody wants to take, with less risk, I think wait for hourly close about 19,030.
All right. What's the strategy also for RIL? Because that's the company which will be reporting in their numbers.
Numbers are strong and we witness profit booking. So I would rather avoid trading ahead of the numbers. As far as recommendations are concerned, I think I would go with one buy, one sell. Khadim is one that is looking good. It witnessed a very strong breakout. There's a follow-through breakout on weekly charts as well. It will be more of a buy on dips call where any dips towards 375, 377 can be bought into target of 405, 410 and playing for target price of stop loss of 355. Second would be a sell call on JSW Steel. We have seen some bounce back sort of coming in, but that is also creating fresh shorts. It's seen multiple breakdowns, so one can play for levels of 700, 705 in JSW Steel. So two stocks are looking good, and one can also look at UPL, which has also seen breakdown. So any rise of 1 or 2% can be again used to create fresh shorts in UPL. These are stocks which have not performed, especially UPL. It has been underperforming stock. So in my opinion, if you're selling a stock which is underperforming, the chances of you making money is very high.
Point well taken. An interesting call there, the sell call that is coming on JSW Steel, because that's one of the top gainers that we have on the list. Gaurav, we're just going to leave it at that, and thank you for taking out your time to speak to us this morning. All right, let's address in the stocks and news quickly before we navigate our conversation to a very important guest on the show. ColgatePalmolive is the one that you need to keep an eye out on. Well reported in subdued set of numbers, so to say. If we just talk about the volume trend, Jefferies is maintained in the buy call rating. It's spoken about the Q2 being in line with the trend witnessed in case of peers. The company has reported in a subdued volume trend. That's the key takeaway for Colgate. The stock seems to be nearly flat volumes YOY. Pricing power, however, has allowed a respectable revenue growth. The margin expansion drove 18% YOY growth in the operating EBITDA performance. That's the one that you need to keep an eye out on. Other one is Vodafone Idea, where the losses have widened. Revenue has remained in flat and a bit of recovery, or let's just say a bit of traction has been witnessed in EBITDA, which is up by as much as 4.5%. The blended average revenue per user, ARPU, per month has only improved quarter on quarter for Vodafone India. Year on year, the same has increased. However, the ARPU remains very low compared to that of its peers. RIL, as I said, it's going to be reporting in a number, and that's the one that you need to watch out for. A couple of expectations out there. The profitability is expected to go up higher. And that's essentially the heavyweight that you need to watch out for. But we're going to navigate our discussion quickly to the next and the important guest we have for today's show, which is Andrew Holland, the Chief Executive Officer, Avendus Capital Public Markets Alternate Strategies. Well, morning there, and thank you so much for taking out the time and giving us this interaction after the sell-off, essentially, which has come on in the markets for the seven consecutive session. The real question to ask is what's next for the markets? What's the strategy? Is it still a market which is buy on dips, or does the narrative now change to sell on rise strategy? What's your assessment?
So first of all, Nickey, thank you for the opportunity to speak with you today. You know, it's if I would have been speaking to you a few weeks back, you know, the narrative would have been, you know, buy on dips, but it's very, very quickly changed to the sell on rise. And I think that's how the market's viewing today's rally as well, or the kind of, whatever you want to call it, a relief rally from the 6 days of downward markets. I suspect that would not. You know, it's probably going to be one of those days where you get some relief, but you know, holding those positions over a weekend, given what's happening in the Middle East and around Israel and Gaza, I suspect probably not. So might be some relief today, but I don't think you'll be wanting to hold those positions over the weekend, given the situation in Gaza.
Sure. Andrew, I'd want to understand from you, putting things in perspective and probably connecting the dots here, US Treasury yields, which are around that 5% mark, also, you know, make for a case for a weaker set of, you know, sentiment for equities. Combined with that, you're seeing the geopolitical concerns, soft earnings. You think all of that has been factored into the markets? You think Nifty can scale back to that level of 22,000 mark perhaps in this year? What are your targets there?
Yeah, so you're correct. It's been more global than local factors up until recently, and obviously you know, even when the problems in with Israel, you know, came to the forefront, it didn't really spike the oil prices up. It didn't really move markets globally, but the bond yield at 5% did. And that took the risk off trade globally, including emerging markets, you know, off, and that really kind of led to FII selling. But in between time, what we've had locally is that you've had the results season start. Now, it's not a disaster, don't get me wrong, but the IT sector, you know, really didn't deliver, or delivered the results, the poor results that we all expected. But again, you know, the commentary thereafter was again very weak in terms of the outlook. But more surprisingly for the banks, again, results kind of broadly in line. The whole discussion around, you know, net interest margins or NIMs has been, you know, is it a one-off? Are we going to continue to see this weakness? I think most people are thinking it's going to be one quarter, but the banks didn't give us any confidence that that's the case. So, you know, there could be, that's the reason why I think that the banking sector is under pressure, because even though you're seeing, you know, good economic growth, good loan growth, the NIMs are under pressure as everyone races to get deposits into the bank. So I think those two factors locally haven't helped our markets either.
So what's really working for you in this market? What are the levels that you're looking at? Is your the target of Nifty 20,000, when do you expect that to perhaps hit the mark by the end of the year, or you think it's going to be longer than that? And if yes, what are going to be the factors essentially which could drive the growth here on, barring liquidity, which seems to be the only factor working in the favor of the markets?
Yeah, so we have a target of, you know, our kind of target, Nifty target is 20,000 by March 2024. And that was predicated on a couple of things, Nickey. One was that the earnings growth should start to pick up from the second half of the year. That's i.e. from September just gone all the way through to kind of March, April of next year, as the kind of the capex by the government and private sector has that multiplier effect on the economy. So I expect earnings to start to improve as we go into 2024. So that's one part of the reason for the move for the index. Second, obviously, we'd be thinking about elections at that point, and I'm sure there'll be some positive vibes around that. And thirdly, I do expect interest rates to fall globally. Now, I've been saying by the end of the year, I might be, it's looking a bit edgy at the moment, but maybe the first quarter, that narrative will change to interest rates falling as the global economy starts to reel under the pressure of 5% yields in the US in particular. So that will give the momentum to the market. So that's our target as of now.
Point well taken. I'd also want to understand, you said perhaps the driver of the growth here on would be the earning growth which will come through. So clearly there's been disappointment there, like you mentioned, banking, IT, and also FMCG, so to speak, with Colgate also delivering a flat volume growth. With that in perspective, where do you think, which are the areas of strength or the pockets of strength which will perhaps lead to this earning growth?
I think it's going to be, partly from the government spending, which has, again, that multiplier effect in terms of, when you build bridges, roads, and, you'll get new kind of construction around that in terms of housing, and therefore that has that multiplier effect across different industries. And I think we'll start to see that play out in the second half. But, I think you've got to look at the themes below the index, Nickey, and it's something we talked to you about before in that, defense, renewable energy, for example, are areas where, spending is going to continue, no matter, what we're thinking, both globally and locally, particularly given what's happened with Israel recently. So those are two sectors, are going to have a lot of capital commitments and a lot of growth going forward. And then you can look at other themes like consumption, maybe slightly different than FMCG, but look at your kind of hotels, your airlines, where people want more experiences these days, not just the travel part of it, and premiumization in the beverage industry, both alcoholic and non-alcoholic, which again is at the very start of the runway in terms of the growth that we're going to see over the next 3 to 5 years. So these are some of the themes I think you can play out and make good money out without just looking at the index.
Okay, but I'm just going to step back and take a little more, or expect a little more aerial view from you in that case. Over the last 1 month, BSE mid-cap 1-year valuation has corrected from 28.86 to 27 times. Small cap valuation too has come down from 24 times to around that 23.5. So there is a bit of correction which has been witnessed in the mid-cap and the small cap valuation. You think with the correction that is set in for the broader counterparts, the correction is overdone, or you think there is more to come in, and perhaps now investors need to start reassessing their options of larger counterparts? Look at it closely. What's your assessment?
It's a great question, and I think that's going to be the debate over the next quarter, isn't it? You got the main index, the Nifty trading at 17 times PE, which is not overly expensive compared to history. So I think if you're going to see a rally, it's going to be led by large caps. I think mid caps and small caps, I think now you'll start to see that differentiation in terms of the stock picking part of that, rather than being tarred with the same brush on the way up and on the way down. So I think, for those quality companies in each of those kind of segments, I think you'll start to see the outperformance, and some of those companies or sectors which were just over kind of buoyed with optimism, I think will now struggle for some time, and we'll start to see that derate and the quality, kind of themes and companies start to outperform. So I think it's going to be, if at best for small and mid caps, I think we're going to see, a fall of, maybe another 4 or 5% from here.
Okay, and for the larger counterparts, what gives you the confidence that perhaps they could be the next growth drivers for the markets, if at all? Because, the stock returns haven't really reflected their earning growth profile thus far over the last 30 months or so to say. What gives you that kind of confidence?
I'd say it's the confidence of the fact that, you will see earnings upgrades, and that will be more from the large cap companies going forward. So I think that's where I'm getting the confidence, and that's why, whilst it's not a big target to get in terms of Nifty at 20,000 by March, April of next year, you will see pockets of the Nifty, and I think that will be led by the banking sector going forward, which will be the one which will surprise on the upside.
Right, let's talk about FII data. They've been sellers thus far, and the number is rather huge that we've seen in today's session too. But if you take a step back, perhaps for the last 2-3 years, we've seen FIIs been on the selling side, and perhaps DIIs being structurally invested into the India's growth story, with SIPs also doing pretty decently. Do you think this trend is expected to continue here on? Do you think if there was any kind of change or further escalation of geopolitical concerns that can lead to further amount of erosion coming in, or let's just say withdrawal of money coming in from FII, which will perhaps now look at China more as compared to India?
Well, I think, let's take the first part of it, which is obviously if there's an escalation of what's happening in the Middle East, then the risk off trade comes very quickly, and foreign investors will, in terms of taking money off the table, will do it across all markets, but they might do it more in India because you have a more highly rated index in terms of valuations compared to other emerging markets, and you have still some pretty strong gains compared to other markets too. So that's where you initially take money off. I think in terms of this whole debate whether India will get more money from FIIs because of the woes in China, I think is slowly turning around. I mean, whilst I'm still of the view that China's been taking a pea shooter or a water pistol, whatever you want to call it, to kind of shore up the economy and confidence. The whole ream of kind of proposals that they've done are starting to work positively at the edges. Now, if they came with a big bazooka and fired that, where you get consumer confidence that the property market is going to start to stabilize, if not improve, that's where I think foreign investors will look back at China and say, okay, things are changing for the better. The valuations are a lot lower, and therefore incrementally I'll be putting money towards China. Not saying against India, but more towards overweighting China in the shorter term compared to India.
Andrew, one last question that I have for you. I'd want to understand. A lot of bearish sentiment has clearly crept in the last 7 trading session with the amount of correction that has come through, and perhaps a bit of confidence seems to have taken a little bit of hit. What's your recommendation to the viewers out there, things that they're not ought to do in a market like this?
I think what not to do is to kind of panic too much. If you pick your right companies and you believe in them longer term, this is always a great opportunity to buy into them again. Buy more. I mean, just think about it as an investor. You've got your SIPs, so you're buying at the top, you're buying at the middle, and you're buying at the bottom. If you're doing it with stocks, and that's the kind of the way I would go about it. So not to panic and not to kind of rush out, kind of get out of your clear companies where you believe that there's a great growth path with good management. I would continue just to kind of buy into that rather than sell out in because of the market kind of volatility that we're going to see in the very short term.
All right, Andrew, thank you so much for that perspective. We'll just leave it at that, and thank you so much for joining us and taking out the time to speak to us.
My pleasure. Thank you.
All right, it is not all that gloomy and doomy as the market looks right now. It's not really that. That's the word. Do not panic at this point of time. The mid cap and the small cap shares have been bearing the brunt if you see the last 7 trading sessions. But today we've seen some amount of recovery. There has been a slurry selling fury which has lashed the Wall Street overall, but the intensity overall has accentuated. Plenty of stock should have hit the lower end of intraday circuit filter, but the data source from BSE shows only 14 scripts have hit in lower circuit on October 25 out of 4,090 traded amid a sharp sell-off. That's a beautiful piece which is written by my colleague Shailaja Patra, who is written about bargains or falling knives. You should go grab that story on the website to tune in for more. But with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.